Guys, welcome back to another case study. My voice is, still a little bit broken, so just bear with me for now. But yeah, anyways, let's get into the case study. All right, so I took a Nas long yesterday, post FOMC, and I'm just gonna quickly break it down for you guys. All right, so starting off from the weekly time frame, what you can see on the weekly is this weekly low gets swept, and then price started moving to the upside. Okay, after moving to the upside, it took out this liquidity over here, right, inducement high, and then the market started trickling back down to the downside, clearing all that liquidity that had built up on the way up, right? So you got this liquidity, or you can say channel or whatever. But yeah, so you got this liquidity right here that got swept. The market came for inducement low, and let me see, I believe, let me turn this gray. All right, so the market came for inducement low, came to the extreme of this low right here, and started moving away. Okay, so you got a liquidity block right there that it tapped into, came to the extreme, and then started moving to the upside. All right, so some of you guys took this trade over here. Unfortunately, I couldn't get involved in that one. Nonetheless, it was clean. You got this low get swept, creating that liquidity block. And then you got this buildup of liquidity getting swept and then tapping into the liquidity block, right? So the trade I took, however, was based off of this right here. Okay, so what I seen was the market started printing higher highs, higher lows, whatever. And then what you see is a break of structure to the downside. And even before the break of structure, you can see printed this low, right? The market printed this low, then printed this high, pulled back, respected that low, moved to the upside. So there's a built-up of liquidity or structural liquidity right here, okay? So the market took that out, and that is essentially the taking out the low induces sellers, okay? So after inducing sellers, let's go mark out this. Now, traders want to be selling at these highs, right? And not just this. If I go to the 15-minute time frame, so if I go to the 15-minute time frame, you can easily see that there are highs and lows that people most likely would want to sell from. Like this, for example, right here, traders would want to sell from there. You can even refine it if you want. And then you got this as well. And there you go. Okay, so remember, as I always mention, before taking out the liquidity, you want to see a buildup happen, right? Now, there wasn't I'd say, significant enough buildup for the market to move higher after that, right? After taking out this low. So what ends up happening is the market comes here, respects this. You can also see that the market created some break and retest liquidity for us, okay? So look how the market comes back, right? Does that little break and retest, goes lower, okay? Now, you see the buildup happen right here. And let's just delete these red boxes for now. you see the buildup happen right there, and then you see the move down, and all you gotta do is wait for that liquidity to get taken out. Okay, so after that liquidity was taken out, or that buildup, because this is where buyers were induced from, right? After seeing buyers' liquidity get swept, right, that's when you can start seeing a trade opportunity. So if you go down to the 5-minute time frame, the 5-minute time frame, sorry, my voice is absolutely in shambles. But anyways, let's just go straight to the one. All right, so on the 1-minute time frame, you can see this right here. All right, you got this structural liquidity that was left, right? Well, not really structural liquidity, but nonetheless, you see liquidity get left right here. And then you see the market pull back, respect this area, right? Respects the area, and then boom, builds that liquidity for us above here. Okay, might have taken it out, not sure. Let me see. I would say perfect equals, yeah, okay. So after respecting that, building liquidity to the upside, you can see the market comes lower, sweeps this right here, right, sweeps this low right here, and I wanted a better entry, so I waited for the market to kind of come more towards the extreme. I was willing to miss out on the trade, but yeah, nonetheless, I waited for the tap of, I believe it was right here, somewhere in here. But yeah, regardless, I ended up getting in somewhere in this candle. When this candle came, took out the low, came a bit more to the extreme. That's exactly where I took it. And then, well, around that area, kept my stops below the low, right here, right, that being the liquidity block. And then you can see the market came here, printed this low, went higher, right? And my target was the highs, right? Pretty simple stuff. I targeted the highs right here. Okay, so I entered right there, as you can see. Right here, market does ends up taking out the high and then takes out this low right here, right, creating that liquidity block. And then you see another trap happen, right? This right here, and then you see the low get swept. Okay, and then coming into the extreme, I didn't go break even because I seen this, right? The BOS to the upside, and then you can see it comes here, respects it, goes higher, right? So look at it this way. Let me just move this over right there. Okay, so what ends up happening is the market comes, respects this low, okay? And then it comes higher, boom, takes out this high, inducing buyers, and then comes and traps the buyers, right? So you got that trap happen right there, and that gave me the confidence to not go break even. So I didn't go break even. I rolled my stops below the liquidity block right here. Okay, so what ends up happening is the market comes, literally teases my stop loss, and then starts moving to the upside, right? And then after after the market came and took out this high, as soon as this high got swept, that's when I went break even. And yeah, pretty much. I didn't take any partials here. It is a good area to take partials here, right? But I didn't take any partials there. I was very confident in the highs going. So I held full position to the highs. And yeah, pretty much pretty simple stuff, right? You can see I got tagged in, comes back, respects that liquidity block, moves to the upside. I went break even here. It also pulled back a little bit and then went higher and finally took out the highs, right? And this is where I took out majority of my position, but more like a good 80%. But yeah, and then yeah, pretty much very simple stuff. I waited for obviously FOMC, right? And that's why you see this whole sluggish price action that happened before FOMC, right? So this right here was basically the buildup that was needed before FOMC, right? And then obviously this happens at 1. The rate happens at 1. Lows get swept. And then, yeah, pretty much FOMC was right here. Sweeps the low, comes, sweeps it again one more time. I entered around 215. And yeah, pretty much. And targeted the highs. Pretty simple, easy move. I got a nice almost a 1 to 9, I believe, out of this move. And yeah, I will see you guys in the next case study.